Most AI investors are staring at data centers, chips, and cloud software. But while everyone debates GPUs and language models, a different kind of artificial intelligence is being deployed somewhere far less crowded, thousands of feet below the ocean surface. This isn't software running in a server rack. It's AI embedded inside autonomous underwater robots that operate where humans can't easily go, where visibility is near zero, and where a single mistake can cost millions. This company is building fully autonomous subsea vehicles designed to inspect offshore oil rigs, monitor underwater pipelines, map seabed infrastructure, and perform complex intervention tasks without a human pilot directly controlling them. Instead of relying on tethered remote-operated vehicles that require large surface crews, these machines use onboard computing systems, advanced sensor fusion, machine vision, and AI-based navigation software to make decisions in real time underwater. Inside each vehicle is a combination of sonar imaging systems, inertial navigation units, pressure-tolerant computing modules, and proprietary autonomy software that allows the robot to understand its position, avoid obstacles, and execute pre-programmed missions. These aren't hobby drones. They are industrial-grade subsea robots designed to operate in deep-water energy fields, offshore wind farms, and defense environments. The unusual part is that the intelligence isn't on the ship above, it's inside the robot itself. That shift from tethered control to autonomous operation is what makes this technology significant. Operating offshore is extremely expensive. Sending human divers into deep-water environments is dangerous and limited. Traditional remotely operated vehicles require massive support vessels and large crews. By embedding AI into subsea robotics, this company is trying to reduce the cost structure of offshore operations while increasing operational uptime. In simple terms, smarter robots underwater mean fewer ships, fewer people, and lower long-term expenses for energy companies and government clients. The broader context makes this even more interesting. Offshore infrastructure is aging. Oil and gas platforms require constant inspection and maintenance. Subsea pipelines stretch for thousands of miles. Offshore wind installations are expanding globally. At the same time, defense agencies are increasing their focus on unmanned maritime systems. The ocean economy is enormous, but it has historically depended on heavy, labor-intensive equipment. Autonomy changes that equation. This company positions itself as a robotics-as-a-service provider. Instead of just selling machines, it can deploy fleets of autonomous vehicles to perform inspection and maintenance contracts. That means recurring service revenue rather than purely one-time hardware sales. The vehicles are supported by cloud-connected data systems that allow operators to review mission data, monitor performance, and optimize future deployments. AI models improve navigation accuracy, route planning, and object identification over time. The key differentiator is operational autonomy. Many underwater systems still rely on human joystick control. This company's vehicles are designed to complete missions with minimal intervention. That matters because offshore support vessels can cost tens of thousands of dollars per day. Reducing vessel time directly improves margins for clients. If autonomy works reliably, it creates a strong economic argument. Traction in this space depends heavily on partnerships with offshore energy companies and government contracts. Demonstrating reliability in harsh marine environments is critical. Subsea robotics must survive pressure, corrosion, unpredictable currents, and limited communication bandwidth. Field trials and pilot programs are the proving ground. When an autonomous system can complete inspection tasks consistently without incident, it builds credibility. Another important factor is the shift toward remote and digital offshore operations. Energy companies are increasingly looking for ways to centralize control rooms onshore, reduce offshore headcount, and automate repetitive inspection cycles. Autonomous underwater vehicles align with that long-term cost reduction strategy. They also produce high-resolution seabed mapping data that can be used for infrastructure planning and environmental monitoring. Now let's reveal the company behind this concept. The business is Nauticus Robotics Inc., trading on the Nasdaq under the ticker KIT, with shares recently around 82 cents. At under $1, it sits firmly in the micro-cap category, which naturally increases volatility but also draws attention from speculative investors looking for asymmetric opportunities. So why is a company building advanced autonomous subsea robots priced below $1? Micro-cap robotics firms often face capital intensity challenges. Developing industrial-grade hardware, running offshore trials, and scaling deployments require funding. Smaller companies can struggle with consistent revenue growth in early commercialization stages. Visibility is also limited. This isn't a consumer tech brand. It operates in a specialized industrial niche that most retail investors don't follow closely. Market size plays a role as well. Larger defense contractors and established offshore service providers dominate headlines. Smaller innovators can remain under the radar even if their technology is compelling. In addition, the robotics sector has experienced periods of investor fatigue when commercialization timelines stretch longer than expected. That combination can suppress share prices even while the underlying technology progresses. Looking ahead, future catalysts could include expanded service contracts, successful long-duration autonomous deployments, strategic partnerships with major offshore operators, or technological milestones proving consistent reliability. The offshore wind market alone represents a growing opportunity, as turbines require regular subsea inspection and maintenance. If autonomous systems demonstrate cost savings compared to traditional methods, adoption could accelerate. However, risks remain. Micro-cap stocks carry dilution risk if additional capital is needed. Execution risk is significant in hardware-heavy industries. Offshore customers demand proven reliability, and a single operational failure can damage reputation. Revenue concentration with a small number of clients can also create volatility in financial results. Investors must weigh technological promise against balance sheet strength and contract momentum. What makes this story compelling is the intersection of AI and physical infrastructure. Instead of powering chatbots or data analytics dashboards, the intelligence here is embedded in machines operating in one of the harshest environments on Earth. If autonomous subsea robotics becomes standard practice in offshore energy and maritime defense, early movers could benefit from long-term industry shifts. At 82 cents, Nauticus Robotics represents a high-risk, high-uncertainty segment of the AI robotics landscape. It is not a guaranteed winner, and it is not a mainstream blue chip. But it does represent a different angle on artificial intelligence, one that extends beyond screens and into the physical world beneath the ocean surface. As always, this is for educational purposes, not financial advice. The goal is to understand what the company actually builds, how it fits into real-world infrastructure, and why the stock trades where it does. In a market crowded with software AI narratives, sometimes the more unusual stories are operating quietly, far below the surface.